This tutorial will show you how to set up a vertical put or call trade. We're using the Thinkorswim platform. It's similar to most of the platforms for trading options. This tutorial will show you how to set up a vertical put or call trade area where you actually using the Thinkorswim platform. Our instrument is similar to most of the platforms for trading options. The type of trade or trade strategy will be a vertical. We'll go into the trade area where you actually place the trade. We make sure that we're in the right week. This week is November 2nd, 2014. The type of trade or trade strategy. In selecting our strikes, we go to the center here and we scroll down. We make sure that we're in the right week. This week is November 2nd, 2014. Spread, put vertical spread at 20. In selecting our strikes, we go to the center here and we scroll down. We will assume that we're placing a make our selection spread. The first thing we want to make sure is that we are selling 2020, 2015. We're selling the higher price and buying the lower price. When we then make our selection to our quantity, the first thing we want to make sure is that we are selling. I'll change it put to 20 to reflect the way we have it. Selling the higher price and buying the lower price. The quantity is entirely up to you. We then go to check our expiration, check our price. In this case, I'll change it to 20 over to here is our credit or the premium. The premium is the amount that you'll collect immediately upon execution of the trade. We check our expiration. This is the order type, and this is very important. Never over ever here is our credit or the premium. Trade at the premium is the amount that you'll collect immediately upon execution of the trade, either a nickel or more. This is the order type, and this is very important. You can always never change the limit order, the price, or whatever you want to do, or cancel it, because you will always lose some profit. It's good for the day, either a nickel or more. Always set a limit order. So we're going to confirm now, change the limit order, the price, or whatever you want to do, or cancel it, but always place a limit order. Selling it's 20 good for the day, SPX 100 weeklies, November 2nd, 2014. So we're going to confirm now, and we'll review the order before sending it. Put at 75 cents limit. We're selling 20 vertical SPX 100 weeklies, November 2nd, 2014. That gives you an idea of where your break-even mark put is at 75 cents right now. Limit. That can change over the next few days. Stock price, but 2024 gross approximation is that gives you an idea of where your break-even mark is. That's approximately right now. Break-even that can change over the next few days. Your maximum profit on this trade for 20 lots is going to be gross approximation is if your maximum loss is $8,500, not including that's approximately your break-even point on the trade. Index options do not have dividends, so you don't have to worry about that. It's going to be $1,500. Your maximum loss, if the maximum spread went into, is $8,500, not including possible in other words, if the market risk hit your index options do not have dividends, so you don't have to worry about that. This is also the amount of your maximum loss if the spread went into the money. The cost of the trade, including in other words, commission, if the market is $39.99, strike prices would be $8,500. So the net profit this is also the amount of margin you must put up to execute the trade. The buying power effect, cost of the trade, including commission, broker is $39.99, $8,500 out of your account. So the net profit trade is in force until expiration or until you cancel the trade. The buying power effect. The other options down here will hold $8,500 out of your account you have while this trade is in force. So if we're going to send this now, or until you cancel the trade. The other options down here, and that will be a working order to your account depending on how much you have in your account. You can monitor that. So if we're going to send this now in the working area, and when it's filled, that will be a working order until it's filled. Now if we want to place a call, we would do exactly the same thing. Here we were filled on that put. This is a demo account. When it's filled, we'll receive a notification trade. You can see immediately if you look at your cash and sweep vehicle that it
we would do
increased
exactly
by
the
about
same thing.
$1,400.
Here we were filled on that put.
This
because
is a demo
the
account
premium
on
is
TOS,
deposited
and we
into
were
your
filled on
account
that trade.
immediately. You can see immediately
Now,
if
if we
you
were
look
going
at
to do
your
a
cash and
call,
sweep
we'd
vehicle,
essentially
that
do
it
the same
increased
thing.
by about
We're looking,
$1,400,
far above the current price
because the premium
So,
is deposited into your
if we were
account
gonna do a
immediately.
call
at
now, if we were going to do a
let's
call,
say
we'd essentially do the same thing. We're looking
2,000
far above the current price.
70,
So,
2070,
if we were going
75,
to do a call at,
once again, let's say
we're coming down here and we want to make sure that we are selling
2,000.
a call.
Right now it came up as
70,
a buy, so you want to change that
2070,
immediately to
75.
sell.
Usually these are colored
Once
on
again,
the platform. We're coming
so that you
down
don't
here and we
make a
want to make
mistake,
sure that
but
we
you
are
need to
selling
check that
a
and
call.
make sure that you're
Right
on the
now it
right
came
side
up
of
as
the
a buy.
equation. So you want to change that immediately
Quantity
to
again,
sell.
we'll put in 20.
Usually these are colored on the platform so that you
Same
don't make a
expiration.
mistake, but
It's
but
the
you need to check that and
70,
make
75. Now,
sure that
because
you're
it's
on
a
the
call,
right side of the
the
equation.
sell side is less than the buy
Quantity
side.
again, we'll put
We're
in
on the
20.
other side
of the market now. We're on the call side.
Same
Make sure we have
expiration.
call.
Here's
the
our
70,
credit
75.
or our
Now,
premium.
because it's a call,
The
again,
sell
only a
side
limit
is
order
less than the
day
buy
as
side.
price. We're on the other
Confirm.
side of the market now. We're on the call side. Make sure we have call. On
Here's
the call
our
side
credit
today
or our premium.
for this
Again,
particular
only
spread.
a limit order day,
Order
best
description.
price,
20
confirm.
vertical SPX weekly, November 2nd, 2014. On the call side
270,
today,
275
call
for
at 10 cents
this
limit
particular
to
spread.
open. Order
Break-even
description,
stock price
20
is
vertical
270,
SPX weekly, November
0.10.
2nd,
That's
2014.
approximately your break-even price.
270,
Maximum
275
profit is
call at 10 cents
$200
limit
on this
to
trade.
open. Maximum loss is
Break-even stock price is
$9,800.
270.
Cost of the trade is
0.10.
$39. That's
Your net is
approximately your break-even
$160
price.
and
Maximum profit
0.01.
is $200 on this trade. Maximum loss is $9,800.
Send
this. Cost of
And
the
it was
trade is
filled
$39.
immediately. We
Your
sold
net is $160
the,
and
that call
0.01
spread.
You can monitor your trades daily. So we're going to send this by looking at your
And it was
filled
filled
orders. Immediately we sold. And then your position statement or
the,
however your
that call spread.
Your brokerage platform is
You
set
can
up.
monitor your
Essentially
trades
they're
daily.
all the same. By looking at your filled orders, just be sure that
And
you
then
are
your
position statement
in the right
or
direction, that
however
you're
selling a call,
your
selling
brokerage
a
platform
is
your
set
net.
up. If you see
Essentially,
debit
they're all
anywhere
the same.
you know that you made a mistake. It always has to say
Just
be
credit.
sure that you are in the right direction.
So
that
that's
you're
approximately,
selling a call.
selling
That's how you
a
set
put.
up a trade and
Your net.
execute
If
it.
you see debit
when you
anywhere,
receive the signal, you know
you
that
have
you
any
made a
questions
mistake.
on
It always
this,
has
please
to say
feel free to
credit.
contact
us through the website.
Thank you.
So that's approximately that's how you set up a trade
This
and
tutorial
execute
will
it
show you how
when
to
you
set up
receive
a
the
vertical
signal.
put
If
or
you have
call
any questions
trade.
on this,
We're
please feel
using
free
the
to contact
Thinkorswim
us through the
platform.
website. It's
Thank you.
similar to most of the platforms for trading options. So we'll go into the trade area where you actually place the trade. Our instrument is the SPX. The type of trade or trade strategy will be a vertical spread. We make sure that we're in the right week. This week is November 2nd, 2014. In selecting our strikes, we go to the center here and we scroll down. We will assume that we're placing a put vertical spread at 2020, 2015. When we make our selection, the first thing we want to make sure is that we are selling a put. We're selling the higher price and buying the lower price. We then go to our quantity. In this case, I'll change it to 20 to reflect the way we have it at the website. The quantity is entirely up to you. We check our expiration, check our price, make sure it's a put. Over here is our credit, or the premium. The premium is the amount that you'll collect immediately upon execution of the trade. This is the order type, and this is very important. Never ever execute a trade at market, because you will always lose some profit, either a nickel or more. Always set a limit order. You can always change the limit order, the price, or whatever you want to do, or cancel it, but always place a limit order. It's good for the day, and it's the best price. So we're going to confirm now, and we'll review the order before sending it. Order description was selling 20 vertical SPX 100 weeklies, November 2nd, 2014, 225, 220 put at 75 cents limit to open. Break even stock price is 24.25. That gives you an idea of where your break even mark is right now. That can change over the next few days, but a gross approximation is if the market reaches 2024, 2025, that's approximately your break-even point on the trade. Your maximum profit on this trade for 20 lots is going to be $1,500. Your maximum loss is $8,500, not including possible dividend risk. Index options do not have dividends, so you don't have to worry about that. Your maximum loss, if the spread went into the money, in other words, if the market hit your strike prices, would be $8,500. This is also the amount of margin you must put up to execute the trade. The cost of the trade, including commission, is $39.99, and so the net profit here is $14.60.01. The buying power effect, the broker will hold $8,500 out of your account while this trade is in force until expiration, or until you cancel the trade. The other options down here, buying power, is unique to your account depending on how much you have in your account. So if we're going to send this now, and that will be a working order until it's filled. You can monitor that in the working area, and when it's filled, you'll receive a notification. Now if we want to place a call, we would do exactly the same thing. Here we were filled on that put. This is a demo account on TOS, and we were filled on that trade. You can see immediately, if you look at your cash and sweep vehicle, that it increased by about $1,400 because the premium is deposited into your account immediately. Now if we were going to do a call, we'd essentially do the same thing. We're looking far above the current price. So if we were going to do a call at, let's say, 2070, 75. Once again, we're coming down here and we want to make sure that we are selling a call. Right now it came up as a buy, so you want to change that immediately to sell. Usually these are colored on the platform so that you don't make a mistake, but you need to check that and make sure that you're on the right side of the equation. Quantity again, we'll put in 20. Same expiration. It's the 70.75. Now because it's a call, the sell side is less than the buy side. We're on the other side of the market now. We're on the call side. Make sure we have call. Here's our credit or our premium. Again, only a limit order, day, best price, confirm. On the call side today, for this particular spread, order description, 20 vertical SPX weekly, November 2nd, 2014. 270, 275 call at 10 cents limit to open. Break-even stock price is 270.10. That's approximately your break-even price. Maximum profit is $200 on this trade. Maximum loss is $9,800. Cost of the trade is $39. Your net is $160 and 0.01. So we're going to send this, and it was filled immediately. We sold the that call spread. You can monitor your trades daily by looking at your filled orders and then your position statement, or however your brokerage platform is set up. Essentially, they're all the same. Just be sure that you are in the right direction, that you're selling a call or selling a put. If you see debit anywhere, you know that you made a mistake. It always has to say credit. So that's approximately, that's how you set up a trade and execute it when you receive the signal. If you have any questions on this, please feel free to contact us through the website. Thank you.